Hello traders, how is it going? Happy Saturday to everyone. It's a lovely weekend the Lord has given to us. Today I want to share with you ICC, or I want to teach you about ICC and also CCT. For those who do not know what ICC is, just go onto YouTube, search Trades by Side, go onto this channel, and then come here to the courses section. He has 13 videos. He teaches everything about ICC. There are also live examples of him live trading with ICC. You can just go there and learn it. It's a very, very simple way of trading. If you've been struggling in trading, maybe you've been using smart money concepts, ICT concepts, and you've been losing, this is a game changer. So go and watch it. And the mechanical version of it is CCT. You can just go onto this channel. It's called Cramson Capital. Once you're here, scroll down to the homepage. In the strategy section, there are these two videos. If you are day trading or intraday trading, watch this one, the daily plus the 15 minutes. If you're scalping, watch the 1 hour and the 1 minute. Now, I'm not going to dive a lot in deep to just share these, because I've already shown you the sources where you can go and get them. But I'm just going to show you live examples, okay, of how you could have traded ICC on Thursday. Yeah, there was a setup that I took, a buy. It was a swing trade, and I was able to close it with like $300. Okay, $300. I shared it on my TikTok, I think. I'll also leave the link to my TikTok channel on the description of this video. Go and follow me there. I usually post all of my trades on my stories on my TikTok channel, but also the breakdowns of my trades. I also have an Instagram. I think I'll leave those both there, but I post a lot on my TikTok, so you can just go and check it out over there. But anyway, enough of talking. Let's start with ICC. So in simple terms, ICC is a trend following strategy. CCT is as well. Okay, so basically what we are taught is that when the market is trending, you should always trade with the trend. But the problem is a lot of people start complicating it with all of these fancy concepts such as ICT, smart money concepts, and all of that, because you are told when the market has already broken a high and created a new high, it should come back to some kind of a fair value gap or maybe an order block, and then this is where you should be looking for your trades. Okay, either from here or here, and then you'll be targeting this high. But the problem with this is, like, you are guessing. Okay, you are guessing that maybe this order block will hold or maybe this fair value gap will hold, and that is why a lot of people tend to struggle with this. Okay, because some fair value gaps might hold, some might not hold tomorrow, or maybe some order blocks might hold today and tomorrow they might not hold, or maybe you might have multiple of them, and it's kind of a hit and miss to know which ones are going to hold. So the easiest way for you to remove the guesswork is just by using ICC, simple price action, whereby if the market is trending up, let's say it has broken above this high, I'll mark it red because we have sellers on top of every high. Okay, and then we have buyers at every low. Okay, because once price comes to these lows, these are areas where the market starts pushing up again. So this is when we know that buyers started pushing price up, and buyers here again, and this is where sellers stepped in. So here is how it is. Once price breaks above this high, it kind of gives you an idea or an indication that the market will buy from there till here. So that kind of prepares you in the future that when the market does that again above here, this is the uh, highest probability area for you to look for buys, and minimum you'll be targeting this high. Okay, the next high, because this is where sellers are at. And if you are a buyer, you need to target an area where sellers are sitting at. You won't sell an iPhone to someone who already has it. You'll sell an iPhone to someone who wants to buy it. And if you're a buyer, you need sellers. Okay, so that your orders can be exchanged, and that is why you put our take profit at these areas. And if you're selling, you put your take profit at these lows. Okay, so once price comes here, the above this area, just when price crosses above this area, that's when you buy, and then you target this area. That's minimum. Okay, and then you can continue holding, because if the market is trending, then it will continue trending in that direction. It won't just stop at one high, it will most likely continue trending. But here is the thing: you do not just enter just because price has broken above this high. You wait for momentum. And momentum is usually found within high volume periods such as New York session, Asia, or London, depending also on the asset that you're trading. For me, since I'm trading gold, it's usually active during New York session most times and also during Asia. So usually I tend to look for continuations within that time zone or within that time. Yeah. So your entry would look like this. In the lower time frame, such as the 30 minute or the 1 hour, for me, I tend to use the 30 minutes most, like my lowest time frame if I'm kind of swing trading with ICC. And then my stop loss is usually below some kind of a higher low that the market created before breaking above this high for the second time. And then once price gets here, I break even at this level. I break even, and then the rest I keep on holding. Okay, and that was the trade that I took on gold. So this is just the thought process of how ICC works. For buys, it works like this, and also for sales, let me invert my scale. Okay, it works like this. The market breaks, giving you an indication that the sellers will be selling from here until here minimum. So the next time when the market comes back, you sell below this line, and then you target here. Once price gets there, you take partials or you break even, and then you keep on holding because you know that the market will keep on trending. Okay, sometimes the market can come and take you out, but it's okay. But when the market is really trending, it will not come back. Most times it will just keep on going. So you do not trade the indication, you do not trade the correction, because all of these just create traps. Just think of it. Once the market breaks a certain kind of level, a lot of breakout traders enter the stop losses within this leg. And so the correction comes to take them out. But also it induces a lot of reversal traders to start taking buys in the opposite direction of the trend. And so when the smart money, or let's say when the institutions or the big banks are ready, then they will start pushing the market to the downside. And then these guys will become also liquidity, they'll be taken out. And so that is why we wait for the indication and the correction, and then we take the continuation, because the institution will have already shown us, okay, now it's time to go. Let's start pushing the market in this direction. Okay, so I hope that was not a mouthful, or that was not overwhelming. Now let me go to the 1 hour here. I'm already on the 1 hour actually. Let me invert my scale again. Now there was a trade that I took here. On this day, the market was already trending to the downside, and then this is when we started breaking highs. Now, the indication is also represented by momentum. You want to see candles pushing very fast. After this was the indication showing us that the market is likely to push. Wait, sorry. Showing us that the market is likely to push from this high to this high. Okay, this is where buyers are interested to push price all the way up till here. So the next time when price is above that level and there is momentum, the market will again push all the way up till that high, which happened within these two candles. But on this day, as you can see, there was no volume during London. There was also no volume during New York. The market just consolidated. And that is why I also love using the 1 hour. Just think about it. If you are in the 15 minutes and you are watching this, you could have taken a lot of losses because you always kept on trying to buy, but the market just wasn't pushing through. So since there was a consolidation, you could have just marked it, and above this area, if price crosses above it, then that's when you buy. And you are not looking for sales, because why? The market keeps on creating these support levels. Okay, the market keeps on creating these support levels, telling you that the market is going up. Now, wicks do the damage, but how the body candles close, that's very important. So pay attention to that. Do not just rush, just wait for momentum. It will show you where the market wants to go. Now, when you're entering using ICC, do not wait for the candles to close. But when you're using CCT, you wait for the candles to close. Okay, because once you wait for this candle to close, you'll have a very big stop loss and you will miss the entire range. So once this candle starts pushing, and this was during the night time here in Tanzania in my time frame, oh, in my time zone, sorry, and this was during the night time. It was at 10 p.m. Okay, 10 p.m. during the night, or at 2200. And so because you know that the market is already starting a whole new trend, and this is a start of the trend, okay, or the continuation of this trend that started from down here, then you can just keep on holding. Okay, and then you look to the left. If you have any kind of resistance levels, there was some kind of a resistance level up here, and you could have targeted that too, but this could have given you a 1 to 4 if your stop loss was here. But since I know that this candle just came and swept liquidity, I would have put my stop loss just below this point, and that could have been a 1 to 6. But this wasn't the trade that I took. This was just an example. I took this trade on this day here. Okay, another indication, correction, continuation. So also the continuation starts a new indication. Okay, so we also have another uh, indication here. All this is an indication, and then this is the correction. Okay, so after this correction is over, I know that the market will start buying again. Now remember, the correction, its job is to come and take out liquidity. Even after taking out these lows, even if the market comes all the way back down, I'm still expecting buys above this high. I'm not expecting sells. These sells, they can happen, it's fine. Okay, because also sellers will have their fair share, and also buyers will be interested to be looking for buys at the lowest points. So that is why I have to wait. But next week, I'm still expecting buys. I'll be expecting buys. If there is no momentum, I'll just sit that one out, but I'll just be looking maybe for scalping during the New York session. So the market is still trending to the upside, it's still creating higher lows. Okay, even if the market breaks below this point, it doesn't mean that the market is bearish. Okay, we are overall bullish. And to just kind of show you proof, even if you look at the 4 hour, this is not a pullback, this is just a stagnation, and then the market continued. So this is one leg. Okay, so the market can come as low as here, but above this level, remember, the market bought from here all the way up till here. So buyers will be interested to buy again from here until here minimum, and then I'll still be targeting this high over here. And so back to the 1 hour, I entered because we're already above this high. I entered on this candle. It was already during the New York session. 1 hour after the New York session had already started. So I entered somewhere here. My stop loss was somewhere here. Okay, and then I got out somewhere here yesterday when this candle started pushing down. I think it was somewhere like a 1 to 6, yeah, there. So that was the trade that I took this on Thursday, and I was able to get out on Friday. It was a very, very beautiful trade. Okay, so that is ICC in a nutshell, how you trade it. Now let us go back to CCT. Now CCT, if you go and watch Cramson Capital's channel, he explains it a lot, so I'll just show you how I did it. But you look at candle ranges. So with ICC, you just trade based off of the waves that the market creates. But with CCT, you use candle ranges to understand those waves, to kind of gauge where the market wants to go. So I'll just show you the trades that I took, the last trade that I took. I took some buys here. Some of the first one lost, the second one was somewhat of a break even because I trailed my stop. And then the last one that I took, this sell, was a win. I just got out with a 1 to 2. I risked 100 pips to catch 200 pips. So I will break this last trade. So I saw that this candle had created a wick, and then this one had closed above. So you always want to see a candle close above the previous candle's high, either if it has a wick or if it's just a body. And then the next candle should come, tap that line, which is your POI. Okay, it's like your level. So this is the indication because the candle has closed above the line, and then once price comes back, that creates the correction, and then the market would continue in that very same candle or even in the next one to give it that continuation. But in this instance, it didn't. So this was like a reversal trade for me, but using the same concepts. Okay, so beneath this line, we know that the market is trending down. Okay, beneath the line, we know that we have sellers. Above it, we have buyers. But since the market has failed to go up, we are still beneath the line. That gave me an idea to look for sells. So that's when I went to the 1 minute. If you're using ICC, if you see a CCT set up on the 1 hour, then your entry time frame is the 1 minute. If you see it on the 4 hour, your entry time frame is the 5 minute. If you see it on the daily, your entry time frame is the 15 minute. If you see it on the weekly, your entry time frame is on the 1 hour. On the monthly, your entry time frame is the 4 hour. That's how it works. Okay. So now let us come here. I started looking at price very clearly. I saw that okay, if you are below this price, then sellers are in control. I started seeing these areas here. The market had created a higher low and then a higher high, and then the market created another higher low. So we are anticipating that the market would continue up, creating a new higher high. But what happened? The market created another lower high. So we have a shift in behavior in the market. Then the market went and broke this low. So I waited for a candle to close and I entered somewhere here. Okay, entered somewhere here. I think on this candle. Remember, the 1 minute time frame moves very fast. Now, here's another thing that Crimson Capital shared when you have a big range of putting your stop loss. If you have a very big range like this, 162 pips as a stop loss is very big, especially on the 1 minute. So you kind of look for areas with fair value gaps. I saw that there was one here, and so I put my stop loss. You can either put it above the candle with the fair value gap or above the first candle. Okay, so I put mine just on the candle with the fair value gap around 50% of this week. Okay, I usually love putting my stop losses above the body, up above the bodies, not the wicks. So that was it. And then, so it was like a 100 pip stop loss or somewhere here. I think I entered a little bit lower. I think on this candle, but a little bit lower. Yeah, somewhere there. And then I looked to the left. When the New York session opened, it created this wick. So I was targeting that. Let's make it blue because this is where buyers are sitting. So I said once price gets here, we'll break even, which I did. And it took me like 1, 2, 3, only 3 minutes, which was insane. It took only 3 minutes for price to push like 140 plus, 122 pips. Then I was targeting a 1 to 2 because I knew minimum price would push even 200 pips. And so when price did that, that's when I got out. Okay, and that was my trade. All right, but this was like a reversal version of CCT. But let me show you like a continuation version before I end this video. Let's go back to the 1 hour. Okay, but if you want more information on this, just go onto Crimson Capital's channel and watch these videos. Also watch these live trades that he takes using CCT. Very informative. He has a challenge going on turning 2k into 10k. Is already sitting at 6k if I'm not mistaken, which is insane. Okay, yeah. Anyway, let's look for a candle. Let's say this candle here. This candle formed during the morning, and also he trades a lot during the New York session. But with this concept, it doesn't matter as long as there is momentum. You can still trade it. Okay, but since you are just starting, just make sure you do as he tells you to. So mark this red because these are the highest areas where sellers are sitting. So we have these two POIs. This candle closed above all of them, so they count. Okay, and then this candle, the 9 a.m. candle, is the candle that came and tapped. So we are entering on the 9 a.m. candle. Let's go to the 1 minute. We already know that the market is pushing up. Okay, already know that the market is pushing up. So now we're just going to look for opportunities to buy. So 9 a.m. is here. One other thing that Crimson said, when the market is coming back for that correction, because this is the indication and then this is the correction, you want to see first the market to close beneath beneath the POI to kind of show you that the market has accepted that POI, and then later on to close above it. But one thing that I figured out with gold is that if it's very volatile, sometimes it can just wick the area and then go away. So I kind of use that too. But if the market maybe has been consolidating a lot, then I would wait for the market to come deeper, close in, and then close back out. So in this case, I would have entered here, and this was the 9 a.m. candle. So after this, yeah, also one other thing, you wait for the range of these candles to be taken out before you enter. So this is the only uh, concept that you wait for the candle ranges to get flipped. Okay, so this was the only candle that took out the range of this candle here. Sorry, yeah, so this candle was taken out by this and this by this. The market kept on going. So this was our last range after price came to this zone. Okay, and so after this candle closed, you would have entered somewhere here on this candle after it closed. Okay, after it closed, this is one way. But even if, let's say, there was a fair value gap somewhere here, once that fair value gap is flipped, then you can enter also. Once the candle closes above the fair value gap, you enter on the next candle. That is also the next entry style you can use. But you can get all of these informations on his video. So you could have put your stop loss just a few pips out, but if there was a wick here, I could have just put my stop loss below there too, because usually price can even come deep, and that was around 28 pips. Okay, and then you hold. But normally, if this was the high, then that becomes your draw on liquidity. Okay, that becomes your draw on liquidity. So you target that. And normally, if I am scalping minimum, I tend to go for 1 to 2s. If maybe to this area is less than a 1 to 2, then I will just go for a 1 to 2, maybe a little bit out. But if my draw on liquidity was maybe somewhere up here, then I would even target it. But as you can see, the market kept on pushing insanely. So this day the market just bought and bought and bought. You could have caught a 1 to 5 until there, or maybe if you hold this until during the New York session, you could have caught what? Let's see, where did the New York session start? The New York session started here. Okay, so that was a 1 to 22, which was insane. So somewhere here where the market started ranging, you could have gotten out, because this entire day the market just started pushing. And most times also I've seen on gold during the morning time, pre-Frankfurt session, the market tends also to start pushing. Okay, because it's like 2 hours before Asia, also 2 hours before the Asian session closes. At that time, you have the Asian session open. Also, the Frankfurt session is about to start. So it's usually very, very volatile, as you can see. And this was a very good trade. You could have risked 28 pips to catch 60, no, not 60. That is around 640 pips, which was insane. As you can see, a very beautiful trade just by using CCT. Sometimes risk reward ratios can be this insane, but if you're just patient to hold, and sometimes they can just be normal, 1 to 2, sometimes even 1 to 1. But usually I love going for 1 to 2s. Okay, and I break even once price goes for a 1 to 1. So yeah, that is CCT plus ICC. If you found value in that, drop a like. If you haven't followed, make sure you do. I will leave all the resources in the description of this video, so you can just go and check them out. These channels, I'll also leave them in the description of this video. I'll also leave the broker that I recommend or that I am using, plus also the prop firms that I am using for those who are looking for prop firms. I have two that I recommend, which is Funding Tips and Funded Next. The links will be in the description below. With that said, ciao, and I'll see you guys on the next one. Goodbye for now.